kind of go over kind of pre-market, post-market trading.
What specifically? Just like
It's just how come 100 share order can flush a stock 5-6% when during the day it wouldn't move it at all.
So when the stock market's open, it's a very liquid market. That's why the bid ask and the SPY is always 1 cent away from each other. There's all the market participants are involved. It's a very liquid market. So to move a stock, it's going to take a lot of money, right? You got to buy a lot of size versus a non-liquid market, like when it's not traditional trading hours, market's closed. These things are very illiquid because people aren't trading. So to move these stocks, the bid and ask on the SPY will be a few dollars, or not the SPY. That's always very tight. But like we'll look at I don't know, some names we usually trade. I don't know, any of these high beta names. They'll have like $5-6 spreads when they usually have 10-cent spreads because no one's around trading these things right now. So 100 shares taking the offer when it's $4 higher, it's going to move the stock $4 higher. But if it doesn't have that huge volume behind it, this is why we wait for the intraday, then the move is usually not real. So we typically avoid pre-market and post-market trading. There are situations where it does make sense, but for the most part, it's typically an avoid. Wait till the market's open. Wait till everyone's playing the game to play.
Shake, for your trading out of 100%, what do you think percentage-wise would be your pre or post-market trading?
So I'd say 99.8% is during market hours, 0.2% is during regular trading, during pre-market or post-market when something I'm in gaps up huge and I'll take some profit off after hours or just things of that nature. It's really only profit-taking situations. I'll sometimes trade earnings when I just kind of want to sling it, but that's not why you should do it.
Yeah. And the person who asked it, and again, if you think even like when we were on the prop desk, like the first thing like we always wanted to do was like we wanted to trade earnings after hours because it was just different. It was like more exciting. And then after you do it a couple times, you're like, it's just so much easier to just trade during the day than to try to,
I'll never forget the story. Oh, this doesn't trade anymore. I'll never forget the story. My buddy, we don't have to say his name. I used to sit next to him at the desk when we moved to that other room. He was like a great trader. He was going so well. And he upticked. Remember we used to have the squawk guy, and he would always be shouting out the earnings. So it was Whole Foods beat earnings. And he meant to uptick 400 shares, and he accidentally double took the offer twice, bought 800 shares. So he was up, things spread up $1, and then it quickly spread down $10 without him being able to hit out, because you can't just mark it out. There's no market orders in after hours. So that ended his career right then and there. It was a 2-minute thing. He just like walked out of the room. He said, I remember he's like, fuck this place. Never saw or talked to him again. There was a guy I sat next to for months. That was kind of the things we learned not to do at the trading firm.
Yeah.
That's why we say don't do it. It's much more important to be in the game tomorrow than to be involved in this fucking after hours move.
Yeah.